The U.S. is renowned as the world's largest consumer and producer of gas, a commodity that carries significant value globally. This reputation might lead many to assume that the country's economic state is flourishing. However, what remains unseen are the challenges the U.S. may encounter in the coming years, particularly in terms of trade, tax management, job openings, and other critical aspects. Although the country has made strides in recovering from the pandemic, it's important to consider the current 3% inflation rate, which, though lower than in previous years, is still a cause for concern. As uncertainty looms, questions arise about the nation's readiness to handle potential adversities or whether it might face a potential collapse. Welcome to Nova Society, the world's best finance channel for personal finance. If you are interested in this kind of video content, then this is the perfect channel for you. In 1945, the world order was established after the end of the war. Similarly, a civil war within a country can lead to the creation of a new order. This phenomenon was evident during the Chinese Civil War in 1949, which marked a new beginning for China. Wars have historically been pivotal in shaping systems, often serving as a great leveler by eliminating debts and initiating a fresh start. The United States, having emerged victorious in World War II, established an American world order with significant economic and military dominance, dividing the world into territories among the victors. This approach has been witnessed throughout history, resulting in periods of peace and prosperity as nations tend to avoid conflicts with the dominant power. Over time, societies embrace peace and seek economic growth, narrowing wealth gaps. However, prosperity can lead to increasing debt levels, which need to be carefully managed to maintain stability and continued prosperity. As prosperity comes, it comes in unequal ways, and some get richer than others, and so wealth gaps rise, and then those wealth gaps increasingly create opportunity gaps because the rich people have more resources to educate their children and of them the benefits, and so that happens over some time. As the economy accumulates more debt over time, it creates both challenges and opportunities in the global landscape. Former adversaries like Germany and Japan, once vanquished after World War II, have remarkably risen to become competitors. Initially, the nations that won held a unique advantage in the aftermath of the war, benefiting from a post-war boom and access to resources. The classic ingredient is that the country that wins the war also has the world's reserve currency because you need a currency to transact internationally. It's like a language, you need a language to transact internationally, and the winner of the war gets the world's reserve currency because everybody thinks that's the most stable, and they also want to save and want to trade and invest in global markets with ease. However, as other nations rebuild and progress, that advantage gradually diminishes due to increased competition and the leveling of the playing field. Moreover, with each passing generation, societies become more accustomed to the benefits of prosperity, which can lead to a change in mentality. People might become less cautious and prudent in their financial behavior, potentially taking on more risk and debt, leading to potential financial vulnerabilities down the road. It becomes crucial to balance the drive for progress and growth with the need for fiscal responsibility and long-term sustainability to navigate the evolving global economic landscape effectively. What we must pay attention to. Ray Dalio believes three significant forces require close attention, and recognizing their cycles is crucial. Firstly, it's essential to determine whether you, as an individual or as a country, are earning more than you are spending. When considering the country, it's essential to remember that it is merely the sum of its citizens. Therefore, it is essential to examine these three forces and ensure clarity in their alignment. By assessing these forces, you can gauge the country's financial health. Is it earning more than it spends in building savings, or is it spending more than it earns, resulting in accumulating debt? The three forces mentioned appear to be fundamental principles of financial stability and sustainability. Ensuring that income exceeds expenditures is a fundamental tenet of prudent financial management, whether for individuals or at a national level. When the country collectively spends more than it earns, it leads to budget deficits and, consequently, growth in debt. Managing national finances is similar to personal finance in many ways. It involves finding a balance between earning, spending, and saving. A country that consistently earns more than it spends can build reserves and invest in growth, which leads to economic stability and prosperity. On the other hand, a country that relies on excessive borrowing to finance its expenditures can face increasing debt burdens, which may hamper economic growth and cause long-term financial instability. In that regard, Ray Dalio pointed out that one man's debts are another man's assets, and when somebody is holding those assets and they're producing a lot more of that money, and debt money goes down in value as they produce it. Higher inflation rates. The process of producing excessive buying power results in poor returns, leading to higher inflation rates and a shift away from cash and bonds. This, in turn, causes rising interest rates and can lead to a phenomenon known as stagflation. The current scenario of increasing debt and excessive spending has led to the printing of more money, leading to inflation. Consequently, holding onto cash becomes less desirable. The second force to consider is internal conflict, which arises from how a society operates cohesively or faces internal divisions. When people prioritize individual causes over the stability of the system, it can lead to disorder, polarization, and even civil unrest. History has shown that such internal conflict can cause democracies to shift towards dictatorships. The third force revolves around the rise of great power in geopolitics, as seen in the global dynamics of countries like China and Russia. As the power of a nation diminishes, other countries may rise to challenge them, leading to shifts in the geopolitical landscape. Recent events in Ukraine have accelerated this process, influencing the world order. These three forces collectively shape the economic and political climate, necessitating careful observation and understanding to navigate potential risks and uncertainties effectively. Maybe I should put those in perspective. There is a very close relationship, common objective of the Russians and the Chinese, so there is competition in the world, and there's a dominant world power which is perceived as being overly controlling. Ray Dalio emphasized the different types of war. There are 5 distinct types of wars: trade war, technology war, geopolitical influence war, capital war, and military shooting war. In our current competition with China, we find ourselves engaged in the first 4 types of wars, such as trade disputes, technology rivalry, geopolitical tensions, and financial sanctions. Additionally, we are indirectly involved in a military conflict due to our support to Ukraine, where active fighting is taking place. Capital wars, exemplified by economic sanctions, aim to inflict economic pain on the target country by restricting access to funds and imports. These measures can be risky, as they may provoke further conflict and threaten the value of the dollar, potentially impacting the global economy. Burdensome debts. Ray Dalio has been in the economic industry for several years now, and so he has been a great contributor to many advice and talks on how the economy could go in the coming years. With that, many people have lent their ears to his words on money value and economic situations. One of the things he said was, "Right now debt is dollars. Any currency, the way you hold it is you hold it in the form of debt. You don't hold it just in paper. And because there's rising inflation, and because there's a lot of printing of money, and because there's also a greater fear on several countries that they too could be sanctioned. Currently, there is a significant selling of debt denominated in dollars, resulting in a decline in the bond market. This trend indicates ongoing capital wars, where countries engage in economic warfare before potential military conflicts. Often, during this phase, the nation's financial resources become depleted, leading to an increase in money printing to compensate. This economic strategy is used as a weapon to gain leverage. As we are experiencing these capital wars and the resulting economic dynamics, it remains uncertain how the situation will unfold and progress in terms of potential military actions. Does Putin and Russia win or lose? I'll describe a win as what he wanted at the outset, which is a win for Russia would be to have Ukraine be in some non-threatening position. Such guaranteed neutrality would allow Russia to have control over eastern provinces and for Russia not to be economically devastated. Instead, to maybe have it something like a 10 or 12% in GDP, and for Putin to be in power. If those 4 things happen, then the cost of his actions will have been worth what was obtained from that, and that would be viewed as a win. Dalio believes that the USA is keeping an eye on how the war between Russia and Ukraine would greatly affect the economy. What the US needs to keep an eye on. The world is closely observing the strength of American sanctions, which is the most potent weapon wielded by the United States due to its control over the global reserve currency. However, the use of the dollar as a weapon has led countries to seek alternatives to holding dollars out of fear that they might be subject to confiscation. The effectiveness of dollar sanctions remains to be seen, and if they prove to be weak, it could pose a problem in the ongoing conflict with Russia, where they are responding with military actions while the US is countering with sanctions. This unique situation of fighting with sanctions rather than military forces presents new challenges. Another aspect to consider is how the world is aligning in this conflict, with countries taking specific actions and forming alliances either in favor or against the involved parties. These actions provide insights into the sides that are aligning in preparation for potential war. Consequently, the psychology of how people view their buying power and assets needs to change. Relying solely on the number of dollars owned is not sufficient, and individuals should focus on protecting their buying power. Cash is perceived as vulnerable, so it is better to have a diversified portfolio that includes inflation-protected assets. Additionally, diversifying investments across various locations and countries can be crucial, considering the geopolitical dynamics and risks at play. Ray Dalio's last warning might hold valuable insights to help you protect yourself and your business during a potentially catastrophic economic collapse. While facing a recession is challenging, this collapse could have far-reaching consequences, disrupting the global economic equilibrium and impacting not only the US but also the world at large. Considering his advice could be very helpful in safeguarding your financial stability and navigating through such uncertain times. Preparing for the worst-case scenario is crucial, as it enables you to be better equipped to weather the storm and emerge resilient amidst the chaos in the global market. Always remember that equipping yourself with knowledge is an advantage. If you want to learn more about personal finance and generational wealth building strategies, visit our channel and subscribe for more enlightening videos to increase your wealth.